This session is physical but for acrobatics.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks, especially tech stocks, led the market higher at the opening bell on Monday after the Senate took a big step towards ending the record-breaking government shutdown that has clouded the picture for the economy over the last 39 days. Tech stocks rallied. We saw broad participation. However, it was really a big cap story here today. We saw Amazon and Tesla were up 1% and 3%. But then when you look at the rest of consumer discretionary, it was a very mixed picture. Part of the reason being on Friday, the broad market actually really outperformed. For example, the S&P 500 was up, the equal weighted S&P 500 was up about 0.5%, whereas the S&P 500 itself was pretty much flat. So to see actually these stocks perform again today, it's actually pretty solid, but we did see the mega caps outperform. Meta, Google were up 2% and 3% respectively. Software participated. Nvidia was the star performer here today, up 4.86% for the mega caps. ABGO was up 2%. AMD and Micron also gained. Microsoft was up 1.67%, and infrastructure was also very, very bullish. Apple was probably the worst performing mega cap, only up 0.5 percentage point, but it has outperformed in the sell-off, relatively speaking. And then we saw stocks do well here and there, but overall stocks did gain in aggregate. Now, gold was up 2.67%, the best performer. We'll talk about why that is a little bit later on in the video, but we saw the XLK tech stocks up 2.23%, and that meant the S&P 500 was up in excess of 1%. But every single sector gained here, from healthcare, financials, industrials, energy, materials, home services, consumer discretionary, and the stocks that were red were defensive sectors, right? Look at real estate, fairly defensive, but mostly cyclical. Staples, completely defensive. Utilities, there's the AI trade there, but in aggregate, the market still views that as a defensive sector. So we saw a rotation from defensives into equity and risk assets. We saw Bitcoin rally, and we saw that rotation happen into mostly growth, large cap growth, small cap growth, and mid cap growth. They outperformed relatively speaking, but in the broad markets, value and core, we actually saw small caps outperform, but it was green through and through. If you just invested here today, your portfolio has done really, really well. And the reason why that is the case is because we finally or potentially have a deal to end the government shutdown. The Senate or the House has struck a deal to end the government shutdown with full year funding through to January 30 and back pay for federal workers. Now, markets have turned upbeat on the back of this because the shutdown could come to an end soon after a weekend of deal making in Washington. A new bill was released late Sunday that quickly advanced a key Senate procedural vote after enough Democrats joined the Republicans to avoid the filibuster. It was a 60-40 win in what some are saying was a bipartisan effort. The prolonged shutdown has taken a toll on consumer confidence and the overall economy, with consumer sentiment dropping to just above record lows. Meanwhile, it has disrupted federal services and delayed the release of key economic data, complicating the Fed's policy making and Wall Street's calculations. Up next for the bill is a vote for final passage in the chamber, though its fate in the House remains uncertain. While it would reopen the government through Jan 30, among other funding provisions, the deal lacks any immediate votes on the extension of healthcare subsidies earlier demanded by Democrats, and healthcare stocks really took it on the chin today. Stuff like Oscar Health was down 15%. Actually a great buying opportunity if you ask me. But this is where we are right now. So by the looks of it, we're going to have to do all of this again sometime in February with the government shutdown. We'll see what happens. That being said, we got a deal the market seems to like. It also, what the market really likes is that Trump is out here floating a potential $2,000 tariff rebate checks, or quote tariff dividend, right, from all the tariff revenue. We'll see if this is the case. That is why gold was absolutely rallying today. More liquidity into the system. And if that is the case, the base of it hedges like Bitcoin, Ethereum, gold, even stocks are going to do very, very well. But I don't know where this is right now. He's more just floating it out there sort of to, get people on their heels. That being said, it is something that is being discussed in the zeitgeist right now. Now, on the back of this government shutdown news, airline stocks, actually were positive to kick the day off, up, 3% in aggregate. They did, however, pair a lot of those gains, and actually most of them seeing, negative digits here, simply because, you probably are going to do this whole shenanigans again sometime in February with this government shutdown. Instacart dropped their earnings, right? They were pretty much flat. They were up 7% here in the after hours. And that's because online grocery orders surged in the third quarter. The company reported an earnings and revenue beat in Q3 with orders up 14% year over year and transaction revenue up 10% year over year. Now, Monday.com also reported its earnings before the bell. It was down 13%, as much as 20% here in the pre-market after the cloud-based project management software maker issued a soft revenue outlook of 329 million, 4 million short of estimates that overshadows its earnings beat. The stock is on track for greater year-to-date losses as the stock had already given up 19% since the beginning of the year. Brutal price action from this name right here. And then Taiwan Semiconductor up 2.94%, and that's because they released their monthly October revenue. October revenue is up 11% on a month-over-month basis, 16% on a year-over-year basis, and you're looking at 11.9 billion US dollars. This is Taiwanese dollars, whereas as you can see right here, 11.9 billion US dollars within the month of October. Pretty much this is telling you that the AI trade, the hyperscalers continue to scale upward, and this is what you want to see. This is why Nvidia and a lot of the mega caps continue to rally. This was really good from the sentiment standpoint, especially after all of the positive developments we got today. And then for everything we saw today, there was 4,000 advances, 2,200 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, the S&P 500 gaining 1.3% or in excess of 1%. And market momentum continues to look like it is recovering. Now, these medium-term averages right here still are below the 50% mark. The longer-term averages telling us everything's A-okay. And this is what we've been saying for a while. The longer-term averages did not budge, and that is why I kept saying buy the dip. The medium and short-term averages were saying, hey, we could experience some volatility, but we've recaptured the 5-day, and you guys know what happens next. We take the 5-day, it goes to the 20-day, goes to the 50, and then the longer-term moving averages keep us going higher. However, we need to see follow-through on this rally, and I'll tell you why. Let's go on the charts. Now we can see stocks are green through and mostly led by the mega caps. The S&P 500, the Nasdaq 100, you know, we're looking at Apple, Meta, Google, these stocks, Nvidia up significantly, but the Russell 2000 participating, don't get me wrong, same with the equal weight, mid caps, small caps, everything in between is definitely gaining here today. You see international stocks are also rallying on the back of this news. Now, crypto down a bit, Bitcoin green, Ethereum red. However, do take this into consideration over the weekend. Crypto was up about 7%, or Ethereum was up 7%, Bitcoin up 5%. So we're seeing a little bit of a give back here, but I still think this is an opportunity to buy the dip. Volatility continues to move down. I think we should expect this. We're probably going to see a 15 handle sometime in December. Yields tick up, and again, that has to do with those stimmy checks, right? You're going to see that the market trying to reprice that, saying, hey, more money in the system, inflation. What happens to yields when you get inflation? Yields go higher. What happens to gold? Gold goes higher. What happens to treasuries? They fall. TLT did fall today. Gold was up 2.72%, silver up 4.35%. So you can see commodities, aka inflation hedges, really positive. And man, Jesus, these assets have just continued to rally, like the S&P 500, which again is not at all-time highs, as you can see right here, guys, but pretty much at all-time highs. Now, we did notch a weekly interim all-time high in the last couple of weeks, and we're trading, sort of at that range right now. But the market continues to look incredibly strong here for the S&P 500. This is a weekly chart, and you guys know I've been talking about this for a while. I think even if we do get a massive pullback, right, we can get a pullback here even to the 6130 level. This is where I think we're going to find resistance, build support right here. Why do I think we're going to find resistance at this level? Because we used it as resistance right here, and then we broke above this level to take us to those all-time highs in the S&P 500. And then from here, I think we're probably going to move higher into the end of 2026. In fact, UBS just came out and said they're expecting a 7,500, S&P 500 by year end 2026. If we are to get to the 6130 area, you're looking at like maybe a 20% gain to that 7,500 level. But if we're looking at from where we are right now, it's probably about a 12, potentially a 13% gain. That being said, on this channel, we only do one thing, and that is buy dips and wait for the right opportunities. And I think right now, opportunities continue to be in tech, in AI. Taiwan Semiconductor told us the AI trade is good, right? Good. And so did the mega caps. They're going to keep spending, and that is going to benefit Nvidia. And that is why we're actually seeing the Nasdaq 100 outperform here today. And you guys know that I've been talking about stocks like APLD, Applied Digital, right? This is where you want to be. I think selling the $13 cash secured puts, let's go on the daily chart really quickly, guys. I think selling the $30 cash secured puts is free money for this name. If you get assigned, hold. If not, I do think the stock is going really high. You can see very strong momentum here at this $30 level. Another name I do like is SIFR, Cipher Mining, not doing that well today. And that's because Iron reported their earnings last week, Thursday, Iris Energy, these two names act in tandem. And you can see that Iris Energy was down 6.84% on the back of that news. That being said, only down 0.38%. So I think we're going to see these names consolidate a bit after the massive move they've seen. That's to be happened, but I do think the path of least resistance is higher. Now, CoreWeave, we need to wait for CoreWeave's earnings. Is reporting after the bell. Now, I am recording this a little bit early here. We'll talk about CoreWeave's earnings tomorrow, but we'll see CoreWeave has come down significantly. I mean, even from these highs right here, CoreWeave, on a peak to trough basis is down 35%. And from these highs right here, on a peak to trough basis, CoreWeave is down 46%. So we'll see what happens. I think that the sentiment is real down on CoreWeave going into their earnings. If they report a revenue backlog of 65 billion or more, I think the stock probably moves higher significantly after their earnings. But we'll see what happens. There's a lot of competition in this space right now. I also like the energy names, EOSE. I actually closed out a lot of my cash secured puts here for this name. I do think this name is probably going to go to like the $25 mark, but let's wait for a pullback. If we can get one to like the $15 mark, somewhere around here, we sell cash secured puts. If we get a sign, we hold. If not, we just collect that premium. So these are the names I do like. I like these AI names. I still like BMNR, regardless of what everyone is saying. I still like the crypto space. I do think we're going to go higher. And I think a great way to play that is through BitMine Immersion Technologies. On the real estate front, you guys know that I do like Open Door Technology. In fact, I put up out a post that I was a big buyer of Open Door. Somewhere around here, the $6 mark. We're now nearly at the $8. I did sell a little bit of the $9 covered calls. Not on all my position. I still hold a little bit. And then probably a stock I'm more bullish on than even open is Better Home and Finance Holding Company. The stock I think is probably going to do like a 50x. I think we're going to see like a $300 price target sometime in 2026. I want to hold shares in this name. Super bullish on the real estate company, and what they're doing with AI is absolutely insane. You can see the stock was up significantly, up 15.4% today. And by the way, Open was actually up, what is it, like 20% today? Somewhere around there. Yeah, 20% after today's trade. And actually, if you take a measured move from the lows, had you bought on Thursday, or I would say on Friday morning, right, you'd be up 50% in this name. Absolutely insane here for Open Door Technology. So just these names, are absolutely rallying. We'll see what it means for these stocks as yields continue to rise. But despite the $2,000 to me checks, I thought the yields would be up like 3, 4, 5%. That was not simply the case. Now, quickly looking at Bitcoin. Bitcoin is green here. Now, this is a key level here for Bitcoin, sort of like between the 100 and 103,000 area, bouncing off this level right here. I said last week the bulls need to hold this level. That's what they're doing. But we need to see follow through right now here, or at least consolidation and then follow through to get to those all-time highs. If not, if we continue to see a breakdown here below this level, then actually that's where things start to get really rough below the 100,000 mark. And yeah, then the bears are really going to get active. Trust me. So bulls, you need to hold, and we need follow through right here, right now. For Ethereum, I think rallies are still going to be sold. Look, we're bouncing right off this key level right here, which is this key level of support going back way back. But look, like for Ethereum, like we need to get the 4,000 level. Otherwise, I think rallies are probably going to be sold into Ethereum right here. And I think this is probably where you want to accumulate. The reason why I say that is because this is probably where we had that last bit of accumulation at the top here. And we do know that resistance eventually turns into support once we rally. And that's sort of what we're seeing right now. But I think we probably need to clear some of these higher levels. Otherwise, I think we're going to probably see price discovery back at this level right here. That being said, I am long in Ethereum, and I am bullish. I'm just saying in the very near term, after this massive pump, we can see a little bit of a pullback if we don't get follow through. That being said, Ethereum can pump in a very big way, as you can see right here and right here. So don't discount the fact that it can actually move viciously. Now with the dollar, very interesting move. You can see the dollar continues to trend high, and I think that's going to continue into year end. Despite this government shutdown, despite everything, you think that the dollar would move down significantly. It did not. It's telling you that there is strength in the dollar. I think 101, 102 for the DXY incoming. And then looking at the 10-year yield, the 4.1% mark, I think we're probably going to continue to see rallies sell into this as we approach the December rate cut. Now, guys, a big risk for this market is that we're going to get a ton of economic data, inflation data, non-farms data, PCE data, retail sales data this week, and everything in between. All of the data we miss, we're going to get that now, and the water is going to be muddied because a lot of the data collection is going to be skewed. It's not going to be that great. So we'll see how we pan out with the data. So that is probably the biggest risk for this market right now. Earnings are behind us. It's the data. And diving into sentiment, guys, and the euphoria is back. However, we are still in the neutral zone, so things aren't super like euphoric just yet. We did move, however, from the extreme fear zone into neutral on the back of that government reopening. We'll see where this goes next, but everything is telling me there is still fuel that can be thrown on the fire. Why do I say that? Well, it has to do with the TGA. Now that the government is reopened, we saw the TGA build up as it was shut down. Now that we're reopened, we're going to see this move down. And this is essentially liquidity coming into the markets. Almost $1 trillion worth of liquidity will be pushed into the markets in the form of stimulus checks, back pay for furloughed workers, etc., ACA subsidies, whatever it is. It's money coming into the markets and money that will eventually make its way into risk assets. And that's just the thing. When the government is shut down, the Treasury general account keeps rising. This is a liquidity drain on the economy, but once the shutdown ends, all that liquidity comes flooding back in. At the same time, earnings are great. 16% earnings growth, mid-teens growth, 8% revenue growth, margins expanding. Absolutely incredible stuff when you look at it in aggregate. This is what you want to see. 82% of companies reporting above the analyst expectations. Growth at 4%. Very, very solid stuff. The labor market, yeah, we are seeing cracks here and there. Don't get me wrong, but things are still very solid if you ask me. 3.4% in federal employment tax receipts. Look, some of the lowest numbers we've seen in the last year, so things are decelerating, but still at about that 3 to 4% trend growth. You love to see it. And when you look at the 12-month figure, plus 6.1%, yeah, the labor market's showing cracks, but that's just how the market normally goes. Now, looking at data tomorrow, the big one we're going to be looking at is the ADP employment weekly change. Now, we do get the weekly for the year. Last week got 14,000. I think any number above the 15,000 mark is going to be great. We also have FedBar is speaking in terms of earnings. NBIS and SEA is reporting tomorrow, Oklo after the close. So those are going to be the big names, but a lot of the big names are already behind us. For example, Instacart, CoreWeave, Rocket Lab, ASC, Space Mobile, they're all behind us for the week, but it's not to say that we aren't going to have a volatile week just yet. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.